welcome the panel and Craig Weber. Any particular? You heard the magic words, last panel. Now I have it on authority from the organizers. They're going to not set up the bar until they see how this goes. So there's a lot of pressure on this team. I'm Craig Weber, head of insurance strategy from Cognizant. Really delighted to be with you here. And really, some really interesting themes have come out today. Kind of surprising to me just to hear how this is all played out. So we're going to serve as the anchor leg of a very, very interesting day. And I'm joined here by a great panel. Just to frame this before I introduce the gentleman here, one of the ahas I've had is that we all believe in this room in the mission of insurance. And that to me is sort of an interesting, almost astonishing thing to have regulators and insurers and reinsurers and tech folks all here to kind of do the same thing. One problem with our industry is that we don't always get credit for the amazing societal good that we do. And so what I want to do is just maybe highlight in some of our comments today some of the ways in which we think we're doing a good job today and ways we can do more with innovation and technology. So that's our task. I'll throw it to the team and stop talking so we can get to that bar and see if they set it up for us. We're going to talk a lot about technology. We'll talk, I've heard mention of parametric insurance, other technology models. We'll probably get into some of those. But let's just see what our panelists can come up with to kind of tie a bow around the other themes that we've heard from today. So in the next session here, let's open this up to the panel. I'm going to have them introduce themselves, but I'm delighted to be joined by William Brock-Long, the former administrator from FEMA, and Hagerty Consulting, Marcus Schmalbach from RYSKEX, Raghuveer Vinukollu, who from Munich Re, welcome, and Peter Brickwedde from Minnesota Department of Insurance. Now, let's just join them. Let's give them one boost of energy before we kick off and say thank you to our panelists. All right, there are no excuses now. You had your energy. Let's get going. Maybe just give one quick minute intro to yourself so we can understand kind of where you're coming from.
Sure. Good afternoon, everyone, and thanks, Greg. My name is Raghuveer Vinukollu. I am the head of Climate Insights and Advisory. If you want to know how important it is, just take the initials. It's the head of CIA. Right, just kidding. Yeah, basically, I sit within the reinsurance division of Munich Re, the reinsurance company, really focusing on the impacts of climate risk and how does that impact in terms of the future solutions. So that's the reason why this is where I sit. I'm not sitting in the corporate team. I'm sitting within the business team, really working with our clients, with the cities, with the communities, really to think about one hypothesis question that we started with: what is the insurance industry going to look like in 10 years from now? So,
perfect frame. Marcus.
Yeah, hi everybody. Marcus Schmalbach. I'm the founder and CEO of RYSKEX, which stands for Risk Exchange. So we are more likely still a startup, 8 years old. We started our journey in London. We are based in the Lloyd's building, 4th floor. So whenever you are there, please say hi. We are linked with Connecticut now for more likely 3 years. We found a home here for our PCC structure. Means we are also working in the captive space. We are, yeah, as I said, an insurtech, so you will hear a lot of buzzwords from me today. AI, blockchain, parametric, that's what we are taking care of. And yeah, what more to say? In my second life, I'm a professor in Paris and Berlin, so I'm coming from Europe. And I'm a professor for blockchain and AI with a major focus on influences on the finance and insurance industry.
You're welcome to bring up the Ryder Cup if you must.
Congrats.
I didn't say it loud, but I wear the old shoes of Rory McIlroy, so
Very nice, very nice.
just to let.
William.
Hi, I'm Brock Long. I'm a recovering FEMA administrator. I've spent 26 years cleaning up disasters, and I think every time I changed jobs in my career, something catastrophic happened. It was funny, the nation went from 2005, Hurricane Wilma was the last major landfalling hurricane. We go 12 years until I get appointed to be head of FEMA in 2017. So if you think about it, you know, the nation goes 12 years without a major landfalling hurricane from 2005 to 2017. I go into office and get hit with Harvey, Irma, Maria, the California wildfires, Hurricane U2 in the Western Pacific, Hurricane Michael, Florence, all of them. And if you add it up, it was 220 disasters and wildfires in 2 years, one every 3 days. And if you add up all the recovery dollars to go fix the communities, as a result of those events, it's more money than the 9 previous FEMA administrators before me combined. We have a broken business model in this country when it comes to disasters. And I'm also part owner of a minor league soccer team, which is a lot more fun than disasters. So, thank you.
Hi, everybody. I'm Peter Brickwedde. I'm Senior Director of Insurance Sustainability and Climate at the Minnesota Department of Commerce. None of those words, well, maybe one of them helps you understand what we do in the state of Minnesota. We're the state's insurance regulator. We also do financial services, which is common for some insurance counterparts. But we also have the state's energy offices, along with 40 different industries across the state of Minnesota. So we see a large swath of the white-collar economy in our state in particular. And my job is to help make sure that we have a stable, affordable, and accessible insurance market, particularly in the homeowner space. So looking forward to the conversation.
All right, let's kick things off with a little buzzword bingo. We'll call this session, I'm going to give them a little bit of a name, Technology and Innovation for the Win, let's call it. And yes, this does correspond to what we talked about, but I just put a cute little name on it just to wake the crowd up a little bit. Marcus, we'll start with you because you mentioned technology. Talk to us about technology, the technologies that you mentioned, and where you think they fit in the climate resilience story.
Yeah, as I already mentioned, I'm working in this blockchain AI sector. When we started 8 years ago, the blockchain bubble was up, and we decided to bring that into the insurance industry. So if you are still not familiar with the blockchain, it's an accounting system. At the end of the day, it's an accounting book, nothing more. But it's very attractive if we talk about, maybe you've heard about smart contracts one day. It's an opportunity to execute claims very fast, very quickly. So this is why we adopted this idea. And the overall idea, I should say, is more likely from us to say, when we talk about climate resilience, that we would love to expand the ILS market as well, means the insurance-linked security market. Just to drop a number, the finance sector is 15,000 times the reinsurance market, which makes it very attractive, and which means that we see potential to sell risk as an asset class to the financial sector as well, to support the work in the insurance industry, which is tremendously good. But what we've seen in the early stages, that the financial market, or hedge funds, ILS funds, whatever, they are not familiar with our vocabulary, and they do not understand this indemnity thing too much. So we ended up with parametric, or better say parametric 2.0, because we are big fans of not having just one single trigger as a solution, but using 2 or 3 as more likely a trigger chain. And the idea behind that is really to open our exchange for the financial sector to invest in traditional insurance risks. So this is the overall idea, and as said, the blockchain helps us to execute that in a very quick and safe and secure way. And on the other hand, I definitely need to drop AI as well. We talked a lot about new data and climate resilience and so on. So we use AI to not underwrite in a more traditional backward-oriented way, but more likely in a prediction way. So making use of every single data which is acceptable or available, then you have to find out what data is really acceptable for your structure. And then the AI helps to make a prediction, more likely to say, okay, how will the hurricane season, for example, affect us in the next year, and not looking backward oriented and say, okay, last year we got hit really high, so we have to ask for higher premiums, more likely using AI to say, okay, what will be the real pricing in the next year and the near future, as soon as this is where AI can help you to make predictions on that, and less underwriting perspective, backward oriented.
Yeah, what's interesting, if I extract what you just said a little bit, as an insurtech, you're taking some interesting technology and challenging some of the conventional wisdom and approaches that the industry has taken.
Yeah, sometimes it's seen like that, but we are definitely not an enemy to the traditional industry.
I wouldn't say challenge in a bad way.
No, I got you. Sometimes I love that when I've been here on a conference before, the commissioner called it frenemies. And did not hear that before, but that's really interesting, because somehow we are seen as exactly this. But it's really, I'm your friend, I'm not your enemy. It's more likely what we do is maybe in the first instance a bit confusing, and I fully understand that. And this is, as an insurtech, it's always about who is sitting in front of you. If you have to pitch it to investors, you have to drop the whole storyline up and down and drop AI 5 times and blockchain 10 times and building the big picture. If you have people like us coming from the industry itself, you will demystify that it's a lot of bullshit bingo. So what I'm saying is differently, but what I'm saying is that technology is also our friend, and we can all make use of it, and it should help us by what we are really all try to do is building resilience and helping our clients with products and solutions. And so we are the guys who focus on the tech track, I would call it that way.
Raghu, from an reinsurer's perspective, you want to weigh in on that take?
Sure. Well, we're friends.
We are definitely.
What I wanted to cover is, I think, in terms of, let me start by saying we just came from the Climate Week. It was last week, Climate Week in New York City. And one of the things that came out of this 1 week, at least what I synthesized from it, is there is nothing like climate change is going to happen. The question and the answer is very clear. It's here, right? So the risk is here. And let's just put some perspective on that. Just from 2018 to 2024, the amount of losses from wildfire in the United States has been $90 billion, right? $90 billion. And that's insured losses. That's not the economic losses. So I'm only going to specifically speak on insured losses. Now, within that same time frame, the amount of homeowners premium collected in the state of California, where the most exposure and most losses from wildfire happen, that was about $75 billion in that time frame. So in terms of, again, homeowners premium covering a lot more than wildfire, is the wildfire market sustainable? That's a big question that the industry has to constantly think about. So what's really happening behind the scenes when we talk about new products and from a reinsurance or an insurance company is we're constantly thinking about the word risk transfer continuum. Insurance does not sound good. It may sound boring for a lot of people, but what's really a cool word to use is risk transfer. So the risk transfer continuum is what I would like to use. It has 3 concepts in it, which is risk communication first, or the assessment of risk. If we have to solve it, we really have to understand the risk. And then it comes to the risk management part of it, which is the risk mitigation, and then comes the risk transfer. So risk transfer, for it to be sustainable, the first 2 parts have to be addressed. And that's really what is the concept of the industry continually working on. And from an innovation standpoint, that's what we are trying to address. United States is the single biggest insurance market, by far, by far. Any company any global insurer you talk to, ask them what their share is of the United States as compared to the rest. It's generally at least 1/3. That's how big the United States market is. But at the same time, we also understand there is a lot of coverage gaps. So from that standpoint, we are looking at some of these insurance solutions that can provide more complementary solutions, and how do we address risk mitigation? Because ultimately, we also have to understand that we cannot change the market overnight. We cannot ask homeowners to change their way of thinking and invest $30,000, $50,000 in risk mitigation. That's not going to happen overnight. So we have to think about community solutions, and that's what we are really looking into. How do we work with the mayors or the community managers or the town managers and really address some community solutions? So one example I like to give is the city of Ileton in California. They just placed a community parametric solution where the community of 500 homes put together there, and they took an insurance solution which pays out about $5,000 right after a flood event happens. So those are the kind of, again, I'm really focusing on that. It's really innovation with the basics involved within the insurance industry, which is, again, the risk transfer continuum.
Interesting, like social construct difference. If you ask people if they want to belong to an HOA and pay into it and get a new road out of it and new mailboxes, they would understand that.
Right.
But they wouldn't necessarily bite on the insured loss piece.
Exactly.
Yeah, that's very interesting. Brock or Peter, do you want to jump in on this question?
I think innovation is important, and we have to have it in the system. I think it's really hard for state regulators to keep up, and I think trying to stay moving at the pace that the innovation is occurring requires a lot of prioritization. It requires decision making. I think it is going to require a continual sort of reinvention of how we staff in insurance departments and evolving that model. I think having a consumer-first orientation through all of that, I think is going to be really important. One of the best things about being on the last panel of the day is everything that you thought you were going to say has already been said by somebody smarter on the panels that have already happened. But it's great because I think one of the points that we've heard a lot about today is how do we think about products that help people stay healthier, stay safer in their homes, in the places where they do business. And can we do that in a way that actually saves them some money? Because people are starting to think about insurance in a way that they really have not, because it's becoming more increasingly a pocketbook issue around kitchen tables, around business tables, and figuring out how we can use some of the technology, some of this innovation to help accelerate the pace of that increasing of health, increasing of safety, and hopefully increasing saving of money so we have insurance that is affordable and accessible will help both us and state departments keep up with that and make sure we're moving at the pace of innovation, but also hopefully prevent the economic and personal costs of increased disasters having impacts in our communities.
Yeah, I don't want to put you on the spot, Peter, but I will anyway.
That's what I'm here for. Yeah.
So did I oversell the sense of collaboration that the regulators and state and local governments and commercial side of insurance have?
I think I'm a business unit of one. The state of Minnesota, we're about the 17th, 18th largest market in the country, sort of bigger than our population size. We don't really have a relationship with the reinsurance industry, for example. What we have is a great interest, but and we have really good dialogue and exchange, and there's really specific projects that I think we could talk about here. But we don't have a regulatory relationship because we don't regulate the reinsurance industry. We don't regulate InsurTech. And so I think it's a different level of creative thinking for state regulators to have to get into. And I think some departments have really done this. You've started to see states start to build out business units that really are focused on climate, really focused on data analysis, and trying to interact with these other enormously important market players that historically state insurance regulators really haven't interacted with at a big level. So I don't think you've overstated it, but I think it's a relationship that's new and needs to get increased in its capacity pretty quickly.
Conversation going, let's keep it wound up is what I'm hearing.
Yeah.
Yeah. Let's talk about getting back to business as usual after an event. And Brock, I'm going to look to you, I think, partly on this. Raghu mentioned some coverage gaps. You know, we're all familiar with some of the major disasters you described, some recently this year. Even in my neighborhood, I live in San Antonio. I'm about an hour's drive from the Kerrville floods, 135 people dead, tens of billions of dollars in economic impact. What happens? What can we do that is innovative and interesting to get back to business as usual, to get people back in their homes, to get recovered?
You know, I've been bogged down in the FEMA reform conversations. I've testified twice in the field, once in New Orleans, and then last week in Asheville about FEMA reforms. One, I think if we're just focused on reforming FEMA, well, then that's too narrow of a focus period, because we've tried reforming FEMA multiple times, once after Andrew, once after Katrina, once after Sandy, the DRA. We keep strapping shiny parts to a rusty bicycle when the entire business model needs to change. And I think one of the things that you need to understand is that FEMA's most expensive expenditure over time is uninsured public facilities. Wait a minute, what? A lot of people have no idea that the way you get a disaster declaration, after all the life safety stuff has taken place, is that the emergency managers go out with public works officials, and what do they start looking for? Uninsured public infrastructure losses. And so the whole system was set up in 1979. And essentially what happened is that somebody thought it was smart, let's connect a dollar to every person's head in America. So whatever the population of Connecticut is times $1, if you can go out and find roughly $3 million of uninsured public infrastructure, you're going to get a presidential disaster declaration. A lot of people don't understand that, right? It's woefully low. And for FEMA to kick out $3 million, it costs them more in overhead to actually just cut the check.
That's one bridge,
to administer it,
by the way,
right?
or something.
So as we go through reform, one, the disaster declaration process has got to change completely. And we have to start rewarding communities that do, states that do land use planning, building codes, and ensuring their public infrastructure. And I think that the states that do that should have greater access to education DOT grants. You know, we've got to start providing those or paying less of a cost share when they need the federal government to come in and help backstop some of the losses. Right now, my greatest concern too, and going back to the Raghuveer is probably going to hit me in the back of the head, because I think we focus too much on risk analysis, okay? What do I mean by that? How many times do we sit in a room and start to figure out what's got to be working in your community, that if it's not working, people are dying or life routine is disrupted? What are those things? That's your hospitals, that's your transportation systems, that's your power, that's your fuel, that's your bulk water systems. So we can try to sit around and game everything that's going to go wrong in this country. I mean, who knew a ship was going to lose its steering currents and knock out some bridge in Baltimore? Or, you know, foreign state actors were going to take out the Colonial Pipeline for kicks and giggles. We can try to sit around and figure out what goes wrong, but we don't spend enough time on what's got to be working. And then if we identify what's got to be working, we have to identify who owns it and how the federal government can actually help them from ever going down or coming back up when they go down, right? And we better start figuring out mitigation programs. So I was proud of the BRIC program that was created underneath my leadership, the Building Resilient Infrastructure and Communities. But the whole purpose of that program was to identify what we call community lifelines, the things that have to be working in your community. Then we better be focusing our mitigation dollars on that in the future. So who cares what happens? What we care about is that this infrastructure we need is still working so that, you know, communities can go on and be viable. It's just a different way of thinking about it.
Raghu, you want to come in on that?
Yeah, no, I think Brock hit on quite a few points, but like to the earlier point which you asked Peter also, I just wanted to address that there is a really nice paper by Climate Policy Initiative called Building Climate Resilience for Cities, along with the insurance industry, right? And that's really one place where the industry can help, and we have continuously worked with many communities and cities to perform these benefit cost analysis whenever there is any kind of major infrastructure changes that Brock was mentioning about. These are places where the insurance industry can actually opine on what would the impact be. Absolutely, the first focus should be on saving the lives of people. But if that second goal can be that what would the impact of the insurability of that community would be. I think that would be a long way we could go. And the insurance industry, including Munich Re and others, we have continuously done even pro bono work, but also consulting work in terms of working with these cities, even though that's not our business model, but we do do that. So in terms of, some other questions and topics that we think about is we as a society, and this also came up from last week from Climate Week, is we are supporting lots of technology in terms of addressing climate change. But what really we are missing out is something that we all see every single day. And that infrastructure is our own green infrastructure, right? Which is nature, trees, and so on. There is so much over the Mississippi River that there are lots of conservation companies that are working towards in how an afforestation project or a wetland restoration can address not just the mitigation aspect of climate change, but also the adaptation aspect. And Munich Re, actually, we partnered with, and there's something that we have presented to the NAIC as well and others, how, along with the Nature Conservancy, how a levee setback, which is a nature-based solution, just a little bit of rethinking and working with the Army Corps of Engineers, how that could reduce the premiums of flood insurance over these communities by almost 65%. And so these are projects that we are continuously thinking about, and we would love to keep that collaboration on.
If I may add too, the other disturbing aspect that I always see after disasters, and let's take Hurricane Helene in North Carolina, for example, I think our public awareness campaigns I would like to see a stronger public awareness campaign between emergency management and the insurance industry, right? I think that we need partnerships and real partnerships. And here's the thing, it seems like for decades we've been telling people to go out and buy supplies, buy 5 days worth of supplies and a kit and a generator and all this stuff. It's an unrealistic financial ask, not just because of income poverty, but also asset poverty. You know, I don't have 3 months worth of savings to my name. I think I'll cut back on insurance to afford my lifestyle. And a lot of that's what's going on. And we will see this in the data, at least at FEMA, where we got to stop telling people to go buy supplies for 5 days. I'd rather them sit down and take that money and be properly insured. And I actually joke that, nobody's ever starved to death in this country after a disaster. Never seen it happen, right? But what I just saw in my home state of North Carolina is 160,000 disaster victims, uninsured or underinsured. So how are we telling people to be ready? And instead of being ready for 5 days, we need to start teaching people how to be ready for life, the tangible skills that go on. You can graduate universities and still not know how to do CPR, invest $1 in the stock market, right? And so a lot of people will cut back and try to save money on insurance, when that's the worst thing that they should be doing and trying to save money in their budgets, in my opinion. So I would like to see stronger campaigns that make sense. And even with flood insurance, stop worrying about the map so much. Any house can flood. If you live in an area where it rains, your house can flood. But we're talking people out of insurance in some cases. You don't need flood insurance. You're not inside that flood map. But if the city and county around you doesn't maintain storm drainage ditches, guess what? That flood map, it changes. Or Walmart gets built down the street. The newly built environment changes that flood map before it can keep up. But yet we still go out and tell people you're in or inside. You're either in or out of a flood map, and it's misleading in many cases.
Marcus, as a technologist, put yourself after an event and just help us think about where technology sits in recovery efforts.
Yeah, I'm turned my head around about that, and I do not want to bash the Munich Re because they are my former employer as well. But they had a nice marketing campaign in Germany a couple of years ago for the first insurer, Ergo, which fits perfectly to what we have heard. And they said, okay, most of you people do not understand what insurance is, and the moment of truth is when the payout comes, you have to send us thousands of papers and fulfill documents, and then you wait 3 months and maybe you get your money or not, is more likely what the people expect. So what I think is, beside private-public partnerships, which I expect as tremendously important, is really that the clients or the policy holders do not have the same understanding of insurance like the risk takers have, which is absolutely normal. So I come back to parametric. Parametric is easy to describe. It can be said, okay, if there's a flood, which happens X, Y, Z, and you can read through that in the newspaper or you see it on television or whatever. This is the trigger number one, which is important. And the second trigger is that you really got affected by the flood, because this is the problem with parametric, which people who don't like it too much argue always about the basis risk, fully understand. But this would make people hopefully aware and understand that insurance is, let's use that word again, not your enemy and more likely your friend, but it should be set up that easy. Think about that, you're really in the middle of a catastrophe, you lost everything, whatever, and then someone asks you to send in papers or for companies to send in documentation, and they say, hey, I'm close to bankrupt, I need the money in whatever, 70, 82 hours in my bank account so I can recover. And this is, from my perspective, very important. Where I'm not saying that tech is the answer. I'm not even saying that parametric is the answer. But the question is, what do the client really need? And they need money very quickly in their bank account if they are affected by a catastrophe. And then on a second layer, I would say tech can help us out here in making use of this smart contract blockchain payout model linked with a parametric solution, because then there is no way of a discussion. Yeah, it's at the end of the day, it's clearly based on facts from a third independent party. So the payout can be done really easy, and the companies or the people can recover and take care of their life again, and not taking care of making the insurance industry happy and sending in too much of documentation. So this is what I believe.
I think parametrics are a great example of what you were asking me a moment ago about how do state regulators fit into this system. So I think there's a real gap. You've got, and we've heard today about examples of sovereign entities using parametric products. You know, the Mexico coral reef example. There's the consortium of Caribbean nations that use parametric products to recover quickly from hurricane disasters. And then you've got local governments. You've got like the city of New York. You've got the Mississippi River Towns and Cities Initiative that Raghuveer was talking about. And you've got a gap of state governments that are sort of bigger than cities, smaller than sovereigns. And state governments aren't doing it. I think you've got a level of sophistication at the sovereign level where they can figure it out and work with institutional players within the insurance system to figure out those types of products. And you've got local units of government who work with trusted community partners to work with people on the ground to figure out what those real risks look like and what the community needs are immediately in the wake that can respond quicker than the indemnity process can resolve a claim. But it's state governments in the middle where there's a lot of opportunity, I think both for the industry, but also for the states themselves, because your mission at the state ultimately is to protect lives, protect the infrastructure. And if you're talking about uninsured losses, that's the metric. Like, we're gonna keep repeating that cycle until we figure out how to get more up to speed on how we can protect our critical infrastructure and ultimately our people at the state level in the US market.
The current disaster declaration model is not going to lead us down to a path of readiness or resilience, period. I mean, if we continue to reward communities for not doing the right things, which is essentially what your disaster declaration process does in this country, we're never going to get ahead. But I will tell you this, with the reform talk, we better be figuring out as a group too how to create alternative funding stream for governors, because it's coming. You know, if you're gonna reduce the footprint of the Federal Emergency Management Agency and turn it back into a disaster relief agency, which I think it should be. It never should have been the world's largest insurer on the planet, which it's become. If you get it back to a disaster relief agency and a community stabilization agency, and the federal government starts pushing block grants down, that coupled with what are the reinsurance avenues for governors that are available, what's the catastrophic bond avenues that are available, what are the parametric insurance, you know, things that are there. I think we have to have some conversations with the insurance industry on how we invite the insurance, like what needs to be done from a capital improvement standpoint to get the insurance companies to come in and insure some of this infrastructure that's uninsurable.
And you'll never states will never on their own have enough in your disaster recovery account to deal with every major disasters, but it's the small ones, it's the mid-sized ones that accumulate that really eat into your ability to provide services. I was on a plane to the NAIC national meeting in 2013 on August 11th, going to Seattle. And I was watching a hailstorm come in through the airport, and we took off, and it was real unpleasant. And once we leveled off, the pilot came on and said, well, that was fun. And everybody behind us is in a ground stop for hail. That half-hour event through the Twin Cities was $1 billion weather event. It was 1/2 hour in August. And that hail event significantly impacted our insurance market. Almost everybody on my parents' block got a new roof. Almost everybody on my boss's block got a new roof. Those mid-size events, which we in Minnesota have had a wildfire event, 2 floods, and a derecho just in the last 12 months. Those are not Hurricane Helene-sized events, but those are all significant disasters for the communities that are affected. And we don't have enough resources over time to handle them all at a state level without figuring out how we can amplify and augment our disaster recovery resources. And the insurance industry is a pathway to figuring out how to do that. Because that risk transfer model that you were talking about a moment ago, Raghuveer, is a pretty proven method for figuring out how to do that and to increase your capacity to respond quickly to disasters, which is what the people in your state are looking for in those emergency situations.
Can we go ahead and put the QR code up for questions, just in case anybody has a question? Or you can raise your hand and we can take it that way. But give that a try. If anybody has a question, we'll give you a chance to do that, and we'll continue the conversation here. Let's talk about a topic I'm going to call eat your broccoli or you can't leave the table. How do you convince businesses, consumers to do the right thing? What does this panel think about pushing people towards some of those solutions, and particularly some of the engineering that we've heard a little bit about today? But I'm not sure we've kind of cracked the code on getting people to act.
I think we talked a lot about building codes, which I completely agree is a huge important part of that system. We don't do the building code in Minnesota. I think most insurance departments don't. So you've got to figure out how to be a partner with that. Folks in the room might be familiar with Smart Home America, a partner in a lot of states on some of these fortified programs. And Julie Shayu-Woodard was on a panel in California at a conference that I was at in May, and she said something that really struck me hard, which was, if you really want to do this, you should stop talking to people or trying to talk to people, which is contrary to how I think most state departments try to engage with the public, right? You're trying to get the word out, you're trying to communicate, but what she meant was, we're not always going to be the best communicator. Finding trusted partners that you can leverage their existing relationships with communities and leverage what people trust. So as we heard on the stage earlier, looking, when you're going to sell a house or buy a house, often the largest financial transaction that most of us will engage in our life, who are you doing that with? You're doing it with a realtor. You're doing it with an insurance agent. You're doing it with a builder, potentially, with an architect, with an engineer, and it's figuring out how to communicate with those groups so that message is reinforced. I loved what Roy said in the morning panel about how we're not going to win alone by just having incentive programs or a grant program. It has to create an economic environment where what is normally sold to the consumer is something that makes us more resilient as a whole. And that's not a message that we at the state insurance department can carry alone. We have to do it with other partners.
I think if I was working for any one of your insurance companies right now, I would be actively writing what the vision of the way forward for a governor looks like. And I'd be getting it, it's a race down to each one of those 50 governors, and I'd be getting, this is an opportunity with reform. I'm all for holistic reform. I hate the way it's being done right now. I don't agree with the way it's being done. I don't think you just kill FEMA and then hope there's a way forward. You're going to have to time phase implement things in. But I don't think governors and emergency managers and the city county managers know what to ask for. If they put out a request for proposal, to do reinsurance, they wouldn't even know how to write the RFP. So I think that your industry is going to have to start putting this down on paper and putting it forward, to these governors on what to ask for and how to start protecting, controlling their own destiny at the state level.
Just a quick story on the Kerrville floods. There was a lot of talk, locally anyway, near me, about the proposal to put flood sirens upstream on the river. This was a very well-known problem. I mean, it was, 100-year plus flood, probably more than that actually, statistically. So they have some excuse, but they knew of the problem. And so I'm not sure how to get people to act ahead of time on things that could be, that impactful on that scale. It's really hard. It's hard to get state and local governments to eat their broccoli too, is what I'm saying. Everybody's the same.
The conversation we were having this morning about wildfire risk, I mean, we're getting there on roofs, as Roy was saying. In order to get people to understand the action that you have to do on wildfire to protect your home, you have to affect the mental picture that you've been drawing in your head of what a house looks like since you were a toddler. Square, triangle on the top, tree outside, plants or flowers in the front of the house. Like, that's how basic the level of communication has to get. And I think that's something that government struggles with. We don't communicate at that kind of level. You've got to find communities, trusted community partners to be able to get you into those conversations before you can start to get people to take important action.
We also, we don't learn from disasters a lot of times, particularly like when I look at hurricanes in my life, 26 years of being a part of Katrina or whatever else. Even 20 years after Katrina, we're so focused on what happened in New Orleans. Meanwhile, in Mississippi, 270 people lost their lives due to storm surge with the ocean rise 27 feet. 10,000 families were displaced in Alabama as well. You never hear that story. And one, because there was nobody to interview on what was it like to experience the ocean rising 27 feet. There's no interviews around for that. And so most of what happened in New Orleans doesn't apply to the coast all the way up to Virginia. But that's where the focus is, and that's what people see. They don't realize that the reason we ask you to evacuate is the ocean rising and swallowing you whole, right? It has the highest potential to kill the most amount of people and cause the most amount of damage. But yet we're not really doing that. We go through what I call hurricane amnesia. I mean, Camille killed 270 people in Mississippi in '69. Katrina did it again, and so we're stuck in this response cycle to where we're not actually taking a breath and understanding what's going on. Hurricane Irma in Florida, we registered more people in Florida into FEMA's individual assistance system than we did in California, Texas, Puerto Rico, and the U.S. Virgin Islands combined. And what we saw were people selling a house up north for a pretty penny, going to buy a house in Florida for cash and not putting insurance on that house because they didn't have to. And they were also talked into buying the homes that were built before the 2001 Florida building codes changed. And then they go through, they lose their home, they bought the wrong home, they had no idea what the real risk from a hurricane was, where they were buying. They paid cash for it, they lost their wealth, and they wanted FEMA to come turn around and make their lives whole again. And so if we don't really understand why we're registering people into individual assistance, then how do we get better?
I'd say, in terms of addressing your question, Craig, there are lots of positive stories out there, and I think we also need to highlight there, because absolutely we need change, but at the same time we also need to acknowledge those positive stories as well. So how many of you have heard about Hurricane Barry? Probably doesn't ring a bell. 2019, it hit New Orleans, and at that same time, the Mississippi was flooding from the north. 2019 was one of the worst flooding of the Mississippi River. But guess what? Those levees and dikes, they held up. That was a great success story, but no one knows. No one remembers that. That actually, risk mitigation helps. Another story, off of the coast of Alabama, a few communities are at risk continuously, so they restored a marshland. And we actually did some analysis for them and found that not only do their homes are protected now, but their insurance could reduce, at least from an expected loss standpoint, by about 15 to 20%. So there are a lot of stories in terms of success stories, but where we also have to address is some of those challenges, like a mayor of Grafton, Illinois, which is the confluence of the Missouri River and the mainstem Mississippi River, did not have, in the same 2019 floods, did not have $25,000 to deploy emergency professionals. So we really have to address that the climate or the extreme weather of the past the future is not the same as the past. So whatever policies we have created, whatever framework we have created, will not work in the future. We have to change that.
I've seen some really amazing engineering videos done by some insurers, like, here's what we did to harden this building against fire, against wind, and part of me just says, why does that not show up on YouTube and get some heavy airtime to get people who are used to consuming information in that way a new view of what happened? Same with the kind of reaction to the hurricanes. I think it's just probably an opportunity that as the generations go, we will have to learn to take advantage of. I think in the time we have left, I have a few questions I want to throw out to the panel. These are from the audience. Let's just throw them out and see who wants to jump on. An elephant in the room is the cost to the environment from using AI. This is kind of the impact on green IT of AI, which I blogged about recently, so I'm glad somebody's asking this question. How do you balance the cost of AI with it being an unavoidable part of our future? Any AI proponents?
Well, I don't know why we're all looking at me for that question.
I don't.
No, you know, in Minnesota, part of our departmental role is to represent the public interest before a Public Utilities Commission. And so I think, you know, this question is, I think, before our commission, as it is in front of many commissions around the country. I think it's a really significant question. I think it is increasingly framed in a cost question, and people are starting to think about it in the same way that they have thought about or not thought about insurance as a pocketbook issue, and it really now is, and it has the potential to have significant impact on residential and commercial rates. So yeah, I don't have an answer, but I would acknowledge that the question is a really big elephant and a significant one to get figured out as quickly as possible.
I think maybe to Raghu's point, this is a new technology that we have not seen before, so
yes.
It's arriving. We will find a way to use it. What were you going to say?
Yeah, no, I was going to say, and I'll use my own experience, right? If you had asked me 4 or 5 years back, what could nature-based solutions do at the scale of watershed of the Mississippi River, I would probably have no answer. But as of now, we're actually working with the Walton Family Foundation and a conservation company, Ducks Unlimited. What we are trying to figure out is what can we do in terms of quantifying the benefits of all of these nature-based solutions and more in terms of the flood risk reduction over the Mississippi River. Can that be actually thinking, can we have thought about it like 4 or 5 years back? But with AI, we are actually able to bridge that gap. So there are those pros and cons. I'm not supporting that that it's not having a cost to it, but we really have to come up with a balance of how this, and I know there are corporates who have data centers that are constantly working on replenishing water back to the watershed and so on. So it's a balance that we'll have to get there.
Let's do a few more. Parametric insurance has been spoken of in the States since maybe 2015 or so, and it's interesting, but still hard to buy. Is it ever coming? Yes or no, I guess we're looking for a yes or a no. Parametric.
Yes, but with policy change.
Marcus?
It has to, because it's part of the solution we need for the future. Yeah, it must be, there are 2 opportunities. You have a technology push or a market demand. And we need, more likely, we have the market demand and we need to push it from the technology side. Means not AI or blockchain, means the risk takers themselves has to push it into the market and offer this solution to the clients. But the need is there, I would say.
I think, again, I don't consider myself an insurance expert, whether it's parametric insurance or whatever it may be, but when you get to the depressed communities that are struggling to afford insurance and different things, I've often wondered if you could use mitigation dollars. We tend to think of mitigation dollars as being brick and mortar, money, dollars towards that type of thing. But how do you use a FEMA mitigation grant to offset the cost of home ownership or of home insurance, not indefinitely, but maybe on a graduating scale, coupled with financial education? Where's the Department of Labor to provide new jobs? To have those conversations. It's got to be more than just a piecemeal solution of here's parametric insurance. There's got to be other things that are strapped onto that, for it to be successful in the future. But I mean, it is a big problem.
And I think the answer is yes. I think it has tremendous potential to augment and amplify our disaster response at the state and local level. I would also be curious to whoever asked that question, who they were thinking of as the purchaser of that product in that question. Because I think the answer is going to be different depending on whether or not you're talking about it for governments, commercial buyers, residential buyers. The pace at which that happens is going to be different.
But I also think, too, getting away from parametric, when it comes back to the insurance and the cost that FEMA has, stop paying for uninsured public infrastructure. If it's insurable, why do we allow cities and communities to not insure their infrastructure and then FEMA rebuilds it for them when it's all knocked out? That crap's got to stop. It's got to be phased out over the next 3 years. And
parametrics could help with that quite a bit. Yep.
Maybe if you hang out over the cocktail hour, you can find out who asked that question, Peter. A couple of questions actually related here. Hurricane Michael House is a building code issue. It was built for the big one. Can insurance companies offer discounts for better insured properties like the house that survived?
Yeah, they definitely can. In Minnesota, in 2023, we required insurance companies to offer a premium discount or a rate reduction for a home that has a fortified roof with hail supplement on it. There was some pushback from the industry about mandates, and we effectively said, well, if you can do it in Alabama, which also mandates it, you can do it in Minnesota. It absolutely can happen, and frankly, a lot of insurance companies were already doing it. What I think is really interesting, where the NAIC has been particularly helpful to us and to our industry, is let's think about what that quantifies as. What is the value of that discount to the insurer and to the policyholder? Because one of the other ways you can try to get action from the policyholder is really demonstrate, what is that going to save me? If I spend X amount of dollars to put a stronger roof on my home, what am I going to then on the back end save on my insurance? And that's going to help them make that calculation if you can put it in real dollars and cents. I loved Amy's example of her earthquake policy, not just telling her what the percentage deductible was going to be, but translating it into a dollar figure. And that dollar figure might be scary, but it actually makes it accessible and understandable to the consumer.
Yeah, I was going to say Alabama's trying to tackle that very problem right there. But for anybody that doesn't understand the house that we're talking about, it was Mexico Beach and Hurricane Michael. And there's a great documentary called Last House Standing. I think it's lasthousestanding.org. If you go there, you can watch about that particular house that's being referenced.
There's some just like that with the California fires too, which I think also have some unique design characteristics that help them survive. Some of it might have been luck too.
Yeah. No, I would say the answer is absolutely yes, right? And if we can quantify the benefits of a levy setback on 1,500 homes in Missouri and showcase 65% decrease in premiums for flood insurance, absolutely we can. The only challenge I want to highlight is, again, the risk mitigation also has to be expanded. It cannot be 10 homes out of 10,000 that are getting mitigated. We can, again, insurance is a portfolio game. So we're coming up with a price based on a portfolio. So the impact of risk mitigation will be even higher if more people adopt that. And that's what the Alabama story is.
Marcus, last word to you.
We're still friends.
Still friends.
Yeah, that's the good news. We are still friends. Last word. Yeah, I see. I see this resilience topic as an overall header, so I'm not saying, as a professor, I give you my takeaway with you. It's not about now implementing AI or thinking about the blockchain again. It's really about the holistic approach, what needs to be done. And then, of course, I would say think about parametric as a potential future opportunity to assist your daily business. And yes, to answer the question, is AI the big elephant in the room? Is it cost extensive? Will it change the world tremendously? The answer is definitely yes. So it's also definitely not a fault to focus on this. Forget about the blockchain. This storyline is over. Don't buy the shitcoins anymore. Focus on AI and download OpenAI to learn how to handle and make the best of the AI experience for yourself.
Well, I have to say I am optimistic about our industry, having listened to the four of you. I think a lot of great ideas kind of packaged up in really interesting ways from the four of you. So perhaps you will all join me in thanking our panel for a great discussion.
Thank you, Craig.
Thank you.
Welcome to the panel and Craig Weber.